UnitedHealth has been America's largest health insurer for years, combining insurance, healthcare services, and pharmacy benefits under one massive umbrella. But 2024 and 2025 has been absolutely brutal for this healthcare giant. We're talking about a CEO's assassination, cybersecurity breaches, federal investigations, and a stock price that's been cut in half. So the big question is, has this created a massive buying opportunity, or should investors stay far away? Today, I'm going to be diving deep into UnitedHealth to find out. My name is Rick Orford, and I help investors make more informed decisions. And hey, if this analysis helps you out, don't forget to hit that like and subscribe button before the end of the video so others can find this video as well. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. UnitedHealth Group isn't just big, it is absolutely massive. UnitedHealth is one of the largest private health insurers and provides medical benefits to about 51 million members globally. It's one of the largest health insurance companies in America by revenue, market cap, and market share. The company has been public since 1984 and has grown over the years through acquisitions. But here's what makes them unique. They're not just an insurance company. Their business breaks down into 2 main segments. First, of course, you've got United Healthcare. This is the insurance side. It's what they're famous for. They provide health plans for individuals, employers, Medicare, and Medicaid recipients. Pretty straightforward insurance business there. But then there's Optum. And this is a little interesting, right? Optum has 3 parts. Optum Health handles actual care delivery. Optum Insight provides data analytics and consulting. And Optum RX manages pharmacy benefits. Basically, they control everything from your insurance to your prescription drugs to the data analytics behind it all. Now, let's talk about what happened to the stock because it's been on a wild ride. Back in June of 2013, UnitedHealth was trading around $60 per share, and it's had an incredible run, reaching a peak of $630 in November of 2024. That's over a 900% gain. But then everything started to fall apart. It tumbled about 50% since then, following some concerning news that I'll go over later. Today, the stock trades at around $302 per share, and this means we are back to levels that we haven't seen since the pandemic. After a huge drop like this, I think it's time to take a look if the stock is fundamentally sound, starting with its financials. Revenue-wise, things look pretty solid. UnitedHealth's annual revenue reached a record $400 billion in 2024, and it's up 7% year over year. But here's where things get a little complicated. The company's been hit by multiple one-time costs. Net income fell to $14.4 billion, and it's also worth noting that this is lower than the $15.4 billion net income that they delivered back during the pandemic. However, the decrease in net income is primarily driven by the cyber attack that they experienced in February 2024 in Change Healthcare, one of their subsidiaries, costing the companies billions of dollars. The attack cost them $3.1 billion, and they mentioned that without the attack, the net income would have been closer to $25.7 billion. On the dividend front, they're still paying out around $8.50 per share per year, which translates to a yield of approximately 2.8%. And they've been consistently paying and increasing dividends since 1990, making them a dividend aristocrat. By the way, the data used in this video is powered by bar chart. It's one of my favorite tools that lets you find data on thousands of tickers and allows you to filter by price, volume, sector, and more, so you can find winning opportunities in seconds. I use it every single day, and you can set up a free account by scanning this QR code or by clicking the link in the description. Okay, so let's talk about why this stock has gotten absolutely crushed. There's some serious issues to know about, right? So the biggest one is higher costs within the company's Medicare Advantage businesses. And these became visible as the quarter closed. They were far above than what anyone ever expected. Essentially, Medicare patients are visiting the doctor way more often than expected, resulting in a dramatic increase in costs. Then we have the leadership situation, which has been absolutely chaotic. Brian Robert Thompson, the CEO of United Healthcare, was shot and killed, sadly, in Midtown Manhattan. As everyone expected, the assassination sent shockwaves to the entire industry. A few months later, CEO Andrew Whitty announced that he would be stepping down suddenly due to personal reasons on May 13th, and that caused the stock price to tumble another 17% on that day alone. And then we have Stephen Helmsley, who's currently the CEO and was previously the CEO from 2006 to 2017. Lowering company forecasts is one thing, but they also suspended their 2025 financial outlook, signaling potentially larger problems. The company mentions that recent income concerns stem from escalating medical expenses and increased care utilization, particularly among new enrollees in Medicare Advantage. The company is also planning to exit Latin America by selling their Banmédica subsidiary for about $1 billion. And this follows a whole series of challenges. The CEO resignation, a criminal Medicare fraud investigation, well, pretty much just everything we mentioned, right? That said, UnitedHealth's aggressive acquisition strategy has caught the attention of regulators as well. The Department of Justice is investigating their proposed acquisitions, which has been delayed due to their $3.3 billion deal to acquire home health provider Amedisys. And if that wasn't enough, they're facing scrutiny for allegedly paying nursing homes thousands of dollars to reduce hospital transfers for sick residents. Of course, UnitedHealth denies this, and they say the Department of Justice did not pursue these allegations any further. But hold on, before you write off this company completely, let's look at what's going for them. Despite all these challenges, UnitedHealth has been attracting customers and growing their market share. Their business model is pretty unique, combining insurance with healthcare services through Optum. This gives them a full suite of medical services that can handle just about any healthcare need you can think of. And before we go ahead any further, I want to ask you a question. What medical insurer do you have? Do you have any thoughts about the overall medical service and experience that you've had wherever you live? Let me know in the comments below or on my Discord channel. Even with recent headwinds, revenue in Q1 came in at $109.5 billion. That's up 8.7% compared with the same quarter of last year. So the company is definitely looking to bounce back. But here's the thing. The stock is down almost 50% from its highs. So I think that we might be looking at a real buying opportunity. The forward price to earnings ratio is sitting at 13.85, which is actually lower than the sector average of nearly 17. So the stock, to me, looks relatively cheap compared to its peers. And think about it. Most of the negative news is already behind them. The cyber attack, done. Leadership changes, handled. The stock has already taken these hits, so we might be looking at a situation where all of the worst is behind us. So here's my take. Right now, the stock has a moderate buy rating with analysts setting a high target price of $440. And that suggests about 40% upside from current levels. But here's the thing, analysts had a strong buy rating on the company just 3 months ago. Now more are rating the company a hold. So if you already hold the stock and paid a lot for it, you might consider buying more to lower your cost base. But I wouldn't hold an oversized position in UnitedHealth, at least not right now. Well, that's what I got for you on UnitedHealth. What do you think about their prospects? Are you going to be buying, holding, or selling? And should I cover a different stock next? Let me know in the comments below. In the meantime, thank you so much for watching, and I'll see you next time.